Good day investors. Intuitive Surgical is down more than 25% this year. This is the company which dominates the robotic surgery and has one of the strongest moat in the healthcare segment. The real question is the stock price after the correction now attractive and is the business still strong? Let's have a look. The company flagship product is the Vinci platform, which is used by hospitals around the world. What makes the business so attractive is its razor and blade model. Hospitals buy the system once, but every procedure generates recurring revenue through instruments, accessories, and service contracts. The more surgeries performed, the more money Intuitive makes. Let's have a look to the company's moat. The primary moat is switching costs. Hospitals invest millions of dollars into the Vinci platform, and the surgeons spend months learning how to use it, making it extremely difficult to switch to a competitor. The secondary moat is intangible assets. The company benefits from over 2 decades of clinical data, patents, and regulatory approvals that competitors cannot easily replicate. I also believe that the moat is still widening as strong procedures growth, expanding margins, and rapid adoption of the new Vinci 5 platform demonstrate increasing competitive strength. Investors should follow the moat trajectory from the KPIs. The first one is the number of procedure growth. This is important for the recurring revenue and it looks okay. The second one is the total number of robots which are actively being used. This also looks to be growing. And the second one is the new installations, which is also good. The company's income statement looks pretty strong. The revenue growth is around 18% during the last 5 years, and the growth is expected to continue. When we look to the margins, it's also very solid. The gross margin is around 67%, and the operating margin is around 30%. The company's balance sheet is also excellent. There is nearly zero long-term debt and the short-term liabilities can be covered by the short-term investment and cash. Let's now switch to the valuation. Even though that the Intuitive Surgical is now at the historically lowest levels of its valuation, for us it seems to be a little bit overvalued. Our fair price for the stock is around $300, while the current price when we are recording this is $424. Let's now have a look to company's risks. The main risk for me is the valuation risk. The second one is capital allocation, where management deploy quite aggressive buyback program in Q1 2026. But with respect to the stock price, I don't think the money are effectively used here. The third one is emerging competition. There are companies as Johnson & Johnson which are actively developing new robotic platforms. The third one is macro headwinds, so there are some tightening budgets of hospitals which can slow down the revenue of the company. My conclusion is that Intuitive Surgical is excellent business, but the valuation is too high for me and I would wait for a better price as an initial entry point. But this is my opinion and you should do your analysis. What I'm using is the MoatIQ. This is a tool specifically designed for the analysis of the business strength and the valuation. Thank you for watching me and see you next time.